What's going on, guys? My name is Lior and welcome back to the channel. Now, if you've been following me and my story, you know that deep down, I am a buy and hold guy for life, right? I believe 100% in buying as much property and owning it for as long as possible. But recently, I've started to have some thoughts about selling off some parts of my portfolio, right? I haven't sold a property off in literally 5 years, which was like my first condo conversion project. So in this video, what I thought I would do is take you through my thought process about why I'm considering selling some of my buildings in my portfolio, right? And I'll actually talk about a super important concept that's actually incredibly fundamental to continue to build wealth in real estate. So with that, let's get at it. What's going on, guys? My name is Lior and welcome back to my channel. Now, before we get into the meat and potatoes of the video, super quickly, guys, if this is your first time on my channel, first of all, welcome. Second of all, make sure you subscribe to my channel. I put out tons of new videos every single week, giving you guys tips all about rental property investing, real estate investing in general. I gave you tours of my projects. I gave you my thoughts about what I'm doing in my portfolio and tips and strategies. So if that's the kind of content you're looking for, make sure you subscribe. So let's get right into it. And as I said in the intro, right, I am very much a buy and hold guy, right? I've always, since basically joining the real estate industry, always believed in the notion that, you should not sell anything off, buy as much as absolutely possible, sit on it, and you're gonna be wealthy beyond your wildest dreams, in say 10, 15, 20 years, right? And I still believe that concept, right? I mean, fundamentally, that is still a true concept. I mean, the people that have built the most amount of wealth in real estate are the ones that have owned the most, right? So if you can continue to accumulate assets, in theory, your wealth should go up. But the concept I've started to explore with recently too is, as I've grown out my portfolio, as I have more investor capital now riding with me too, is the concept of portfolio and equity management, right? And really what this comes down to is the concept of velocity of money. And basically all this, all this jargon, all this really means is that, velocity, if you think about it, velocity of money is just how quickly can your capital or your cash go through investments to come back to you so you can redeploy it and buy more, right? I mean, it's a pretty straightforward concept, right? As an investor, we put in our cash into some sort of investment. We hope it generates return. And then obviously, if you're going to continue to try and grow out your portfolio wealth, you're going to redeploy that and do it over and over again. Now, the issue with real estate is, it's a very liquid asset. And a lot of times we have a lot of equity trapped in our properties, right? And, even though typically that's fine, right? Because, I invest in markets that I am super high on, that I believe are going to continue to grow and expand, right? AKA Boston, which is my market, right? There's still something to be said for a lot of the equity I have trapped in my buildings, right? Because basically, if I can free up some of that equity, I can redeploy that capital and go get new opportunities, right? So that's the concept of the velocity of money, right? Is basically how fast can your money come back to you so that you can redeploy it and continue to grow out your portfolio. So with that being said, I'm going to talk you guys through kind of the 3 points I'm personally thinking of right now for myself, as how I'm taking this concept and why it's making me think of potentially liquidating a couple of properties within my portfolio that I absolutely love. So number one reason is, as I mentioned, I have in a lot of my buildings quite a bit of equity locked up, right? And again, this is not a bad problem, right? I mean, it's a good problem to have, right? Because basically, a lot of these buildings we have a very healthy position on. And, from a balance sheet perspective, that looks great. Obviously, banks love that. But the flip side to it is that's cash that's essentially locked in these buildings that I can't use to, go buy more properties, more opportunities, continue to invest in my business, or even that's cash that I can't even use for my own lifestyle, right? Whether I want to go on a trip or do whatever it is with it, right? Now, you may be thinking to yourself, well, why don't you just cash out refinance? And on a lot of these properties I have, right? A lot of these properties I've re-levered back up to 70 or 75%, right? So I've done cash out refinances. But when you really think about it, right, I mean, we still have, anywhere from 25 to 30% equity in a lot of these properties. And, on $1 million to $2 million properties, that's a fair amount of equity that, again, is locked up in these deals, right? And that got me thinking, if the property continues to grow, the return on that equity is not bad. But what happens if I take some of that equity out, right? Not all of it. I'll still obviously keep the bulk of my portfolio. But what if I take some components off the table and then redeploy them to higher and better use, right? So that's kind of that concept of, again, velocity of money as well as equity management, right? Some of you guys might look at it as return on equity. That's certainly another way to think about this. But basically, you're thinking to yourself, is my equity better off sitting in a, stabilized building here? Or is it going to produce a higher return for me if I go throw it into a new opportunity? And that leads me to my second point, right? Which is right now, another reason why I'm considering selling is I see a crap ton of opportunity in the market, right? Just these last few months, I've locked up some bigger projects for myself. I do see there's a shift in the marketplace going on that I really want to capitalize on. And even though in a lot of my deals, I do certainly, raise investor capital to help me kind of execute on the deals, it certainly will be nice to have some of my own cash freed up so that I can also put my cash into some of these projects and continue to push them along, right? So, it's kind of, again, taking that concept of, is my money, maybe my money's not better off trapped in one building, but rather sell off, right? Take those profits and then kind of go on to the next bigger project. And finally, the third thing I'm thinking about as it relates to selling is, as I mentioned, guys, a lot of my deals I do have investor capital on, and I am very cognizant about the types of returns I produce in them. Now, a lot of my investors that invest with me are pretty sophisticated investors, and a lot of them measure returns based on an IRR schedule, right? And basically, the big thing with IRR schedules is that the returns are sensitive to how long it takes me to return the capital back to the investor, right? So for example, if a capital partner invests in one of my deals and I return to him a certain amount of dollars year one, that his IRR is going to be significantly higher than if I continue to sit on that building and maybe sell it off in year 2 or 3, even if I get a little bit more higher sales price, right? So you kind of have to do the math and really map it out, which I have. And I've noticed that there's some situations where, I want to be sensitive to my investors. I want to provide them with the highest returns. And honestly, sometimes it's probably best to just sell off a property, really capitalize on all the juice you've extracted from it, and get that really, time-adjusted return for my capital partners and move on to the next opportunity. So that's kind of the 3 reasons that are really sitting on top of my mind. I haven't formally I haven't formally listed anything on the market yet or done anything concretely, but those are the reasons that I've kind of been really thinking through the last, I would say, probably month or 2, right? So, and on this channel, I kind of try to give you guys my thoughts about what I'm going through in my portfolio and in my business. Those are my thoughts right now. We'll see exactly how this plays out. I do think I'll probably end up moving at least 1 or 2 buildings, just because, as I said, I recently closed on some really big projects. And I really want some of my own cash involved in them as well, even though I raised some money for them. I'm super high on these projects. So I think I'm gonna make some sort of move, but hopefully this is helpful for you guys. Hopefully this kind of puts some ideas in your head. Even if you're a buy and hold girl or guy or whatever it is, that is 100% set on that strategy like I am. I do think there is some validity in terms of thinking of potentially selling off some buildings that you've done well off and kind of redeploying that capital. So just make sure you analyze your own portfolio, see where your next opportunities are, and make the best decision for yourself. So hopefully that makes sense, guys. Let me know if you've got any questions in the comments below.